What's up, investors? Welcome back to the Rent to Retirement YouTube channel, a channel where we give you the facts about all things real estate to help you create a successful financial future. Please remember to like, subscribe, and turn on the notification bell below. I've really appreciated the support and feedback in the comment section. My name is Sam Hack, and I'm here today to enlighten you about one thing we all have a guarantee on in life: death. Just kidding, it's the other thing, taxes. The late, great Albert Einstein once said, "The hardest thing in the world to understand is the income tax." Why would one of the smartest people in the world say this about taxes? Because in my opinion, it's because they're so boring. There's nothing particularly sexy about taxes, and that causes us to ignore them. We simply accept that we're going to be taxed however much the government wants to tax us. This is why taxes begin to creep up on us without us even knowing. Taxes always seem to go up and never down, becoming an increasingly evolving problem. Interesting how our country was founded on the basis of being overly taxed, isn't it? By the time we take a look at what is happening, we could be paying over 50% of our income in taxes. However, if we do pay attention to our taxes, we could play the game smart and minimize our tax bill each year. So why does the government like to tax us so much? Well, it's complicated. Taxes are a way to collect money to pay for public goods and services such as roads, police, and public education. These are all things that the government has deemed essential for the greater health and wellness of our society, and things that most people would not be able to pay for themselves if they were privatized. Taxes are also a way to shape the economy and create incentives, aka influence the way citizens behave. If we tax something heavily like cigarettes, fewer people will hopefully buy them. If we waive all property taxes for 10 years in a certain area, more people will likely invest and develop there. Let's take a comprehensive look at some of the ways that we are taxed. Number 1, income tax. There are a few different types of income tax in the US. The most well-known one being federal income tax. Federal income tax is on a progressive scale, meaning the more you earn, the more you'll pay. Federal tax brackets are also marginal, meaning the amount of income that falls within each bracket is only taxed at that bracket's rate. Just because you dip into an upper tax bracket, let's say you got a raise, doesn't mean all your income is subject to that higher tax, only the portion that falls within the bracket is. Our second type of income tax is the state income tax. State income tax is interesting because it's up to each state government to decide. Most states have a progressive and marginal scale, just like the federal income tax. However, they vary widely from state to state. 7 states have no income tax at all, including the states of Washington, Nevada, Texas, Wyoming, South Dakota, and Florida, while California has the highest state income tax with a top marginal rate of 13.3%. Our third and final type of income tax is local income tax, including both county and city income tax. Yes, the county or city you live in may also be taxing your income without you even knowing about it. Insane, I know. In New York City, for instance, you'll have to pay between 3 and 4% just because you live in the city. That's certainly a lot of subway rides. Oh wait, you have to pay for those too. Oh, by the way, did I mention we also have to pay for Medicare and Social Security taxes out of our income? Oh yeah, and also capital gains tax when we sell an asset for a profit. Wow. This video is going to be a lot longer than I thought it was going to be. Well, it's a good thing we're done paying taxes now that we've gotten our paycheck, right? Wrong. After we get our sweet, sweet paycheck into our checking account, we will then have to pay tax on things we buy with that post-tax money. This is known as sales tax. Sales tax is a tax on consumption. The more you consume, the more you pay in tax. Every state except Alaska, Delaware, Montana, New Hampshire, and Oregon assesses sales tax. I quite like the idea of sales tax because it seems to me the great equalizer for the poor and the rich. With income tax, your money gets taken right out of your paycheck, whether you like it or not. However, with sales tax, if you don't want to pay much tax, don't buy so much or as expensive stuff. Our third type of tax is excise tax. An excise tax is a tax imposed on a specific good or activity. Think of it as a high sales tax on certain things the government doesn't want you to buy. Common goods that are levied with an excise tax are cigarettes, alcohol, or gambling. Another common example that most people don't think of is the federal gasoline excise tax of 18.4%. States also impose excise taxes on gasoline, the highest being California at 50.5 cents per gallon. Personally, I thought I was going to be really smart and save a bunch of money each year by buying an electric car in Idaho for my commute to work. But when I went to register, they charged me an extra $75 a year because I wasn't going to be paying the excise tax on gasoline in Idaho, and the government didn't want to miss out on the revenue. In this case, I might have been able to save a bunch of money each year on my gas bill, but a government sure won't let their tax revenue fall by the wayside. They'll figure out how to tax you one way or another. Speaking of car registrations, let's talk about our fourth major type of tax, property tax. There are two types of property tax. The first one is personal property tax. Now, personal property tax is an annual tax imposed on movable assets. Think mobile homes, RVs, vehicles, boats, planes, etc. The portion of your vehicle's registration or license fee that's based on the value of the vehicle is considered a personal property tax. The second type of property tax is the real estate tax, often referred to as just property tax. Real estate tax is one of the oldest forms of taxation. The funds typically go towards local services such as sewer treatment, road maintenance, drinking water, and schools. These real estate property taxes are calculated based on the value of your property, which includes the value of the land itself, plus the value of any buildings you have on it. Tax number 5, the estate tax, also known as the death tax. The estate tax is usually one most people don't have to worry much about. But as real estate investors, let's learn the rules because it could apply to us someday. For 2021, the estate tax exclusion amount is $11.7 million per person. That means a person who dies in 2021 can leave up to $11.7 million to their heirs tax-free. A married couple gets twice that amount. Any amount inherited beyond this amount is taxed at a top rate of 40%. Of course, through gifting, trusts, and other estate planning strategies, many wealthy individuals structure their estate in such a way that they're subject to very little estate tax. So all of this seems like a lot of tax, right? Well, it is. Let's run through a quick example to show you how you could be paying over 50% of your income in taxes each year without you even knowing it. This is a quick and dirty breakdown of all taxes someone might incur in their life. Evaluate your own tax position to find out exactly how much you could be paying in taxes. For this example, let's use Rob, who lives in New York City. Rob makes $100,000 a year as a financial analyst. Rob is going to pay an effective tax rate of 15.1% for federal income tax, 7.65% for Medicare and Social Security tax, 5.38% for state income tax, and 3.44% for local New York City tax, giving us a total take-home pay of $68,428 a year. That's still a great living, but yikes does that number look different than the $100,000 a year we thought we were making. And we're still only on our first type of tax. Now that Rob has some cash in his bank account, he's gonna go spend it on some goods and services that he wants and needs. Well, Rob is gonna get slapped with another tax every time he buys something, taxed even more if he buys something the government has determined is not good for Rob, taxed more if he owns a car or other assets, taxed more if he owns any real estate, taxed more if he tries to invest in the stock market and eventually sells his stock, and taxed more if he's able to accumulate a good amount of wealth and then passes away. Can you see how quickly this can add up? Just for good measure, there's one more tax that I like to point out, and it's called the cash tax. Just for holding cash, the government is making you lose real value at about 2% each year due to inflation. Please go back and watch my inflation video from a couple weeks ago to learn a little bit more about this. So now that we know about all these different types of taxes, my goodness, doesn't it seem like everyone just wants a piece of the pie? They're trying to tax you here, they're trying to tax you there. It's like hot potato for your money. Who wants them? Which government's gonna take it now? Which government's gonna take it then? And really, at the end of the day, is there gonna be any left over? After hearing all this, it's kind of no wonder the poor are getting poorer and the rich are getting richer. But why are the rich getting richer? Because they understand taxes. You hear about billionaires in the news that haven't paid $1 in taxes for years and years. Look, I didn't make this video to scare you, but by learning more about the types of taxes that you pay, you can reduce the amount you pay all year long. Billionaires not only understand taxes, but they choose the best way to conduct business and invest their money to minimize their tax burden. One of the biggest and best ways to do this is by owning investment real estate that is chocked full of tax advantages as far as the eye can see. We'll get into that next time, right here on the Rent to Retirement YouTube channel. Please remember to like, subscribe, and turn on the notification bell below. I've really appreciated the support and feedback in the comment section.